So I got a margin call for Interactive Brokers, and here's the message I got. So excess liquidity alert: your account, while currently margin compliant, maintains qualifying equity, meaning equity with loan value, at a level only 10% above that which is required. Please note that we do not issue margin calls, and should this cushion erode and your account no longer remain margin compliant, it will be subject to forced position liquidations. So that means they might sell some of my existing positions to get rid of the lack of buying power that I have. To ensure continued compliance, please consider depositing additional funds to increase equity and or closing hedging positions to lessen margin exposure. So here's what I'm going to do. All right, so my net liquidity is 3,400, buying power is 1,500, but I've got unrealized P&L of 1,500, negative 1,500. Excess liquidity here is 459. To be honest, I'm not too sure about the calculation here, but what I do know is I've got $5,000 cash that I deposited and bought 20 shares of CIBC and 79 shares of this cash ETF, CSAV. So my cash is completely used up here. And actually, these positions are not in trouble. They're actually up $63. CBC's up, CIBC, sorry, is up $63, and this one, the other one's up $12. And then I've got a bunch of call spreads and one put spread. And my cash holding is 26 Canadian, 769 US. So these call spreads, they take about $500 buying power minus the credit that I received. The credit that I received is deposited in my US cash. So that's where my US cash comes from. It's a credit received from selling those call spreads, but there's a risk with these call spreads, and it's basically $400. So I got a bunch of call spreads with a risk of $400. I've got this Netflix Bear call spread, 450, 455. As you can see, it's almost at max loss. It's trading at around 4.5 instead of $5. I'm down $348. But to mitigate that one, I sold a 450, 445 put spread that I sold for $1.50, and it's now worth $33. So actually, it's showing almost full profit. So I'm going to actually close this one. That's the first step that I'm going to do. Although these ones together, they don't add buying power because combined, their max loss is actually less. But I'm going to close it anyways because I want to take profit on this one. So let's put an order to close it. So this one, it's trading between 31 and 42. Let's put 30. So minus 0.3 debit, transmit order. All right, so that's for that one. This one, let's see what Netflix is trading at right now. Netflix is trading at NFLX. Netflix is trading at, let's just look at the stock, at 475. Yeah, so this one's also going to get breached. So let's go back to the portfolio. So I might sell a put spread on this one as well as mitigation. And then this one's long, this one's XSP, this one's lost. I'll probably just close it for max loss. So XSP or the SPX would have to drop below 44.20 for me to win on this trade. Right now it's trading at 4.6. This is going to be bad. All right. This one's at 450. I think XSP, sorry, is at 455. Let me think about this one. Yeah. Okay. So here's what I'm going to do. Where's this one? 470, 475. I'm going to sell a put spread on Netflix at 470, 465 to mitigate this one, December 8th expiry. So December 8th expiry. Where's my December 8th? And I'm going to sell a put spread. So 470, 465. Well, I can't see. Get out of the way. 470, 465. Mid is $1.80. Let's try to ask. Let me start with $2. Minus 2. So this way, I sold a Netflix call spread for $1. If I sell the put spread for $2, I've collected $3. My max loss would be $2 on that trade. So I'm sending an order to sell 470 put, buy 465 put on Netflix. Same expiry as the existing call spread that just got breached. So I'm sending the order. All right. I might adjust afterwards. I'm just sending the orders now. So this one and this one is going to be a max loss, and I sent the put spread is already almost profitable, 100%, almost 100% profitable. I sent the put spread to mitigate this one. This one is lost. I could just close it or just let it play out for the remaining $40 max loss, additional loss. I mean, it's already showing a max loss. 450, 455. I'm gonna sell a put spread against it now. December 8th. I'm gonna sell 450, 445 put spread to mitigate it, just to reduce max loss. So I'm gonna look up XSP. I already forgot the expiry. Was it December 15 or 8? Let's go back. So it was December 8th. 450, 455, 450, 455, December 8th. Okay, but I want the put spread, not the call spread. So XSP. So I'm only doing this just to mitigate my call spread that's getting breached. I'm not trying to place a winning trade. I'm just trying to reduce the max loss on my existing call spread. All right. So the short strike was 450. So I would sell the 450. See, there's not much premium. That's the problem. That's a bad idea. I would collect 50 cents on this. Well, there you go. I'm not gonna sell. I'm not gonna add additional risk for just a 50-cent credit. So I guess I can't even do anything on this. Oh, this is November 28th. No, I won December 8th. You see? Okay, that makes more sense. Okay, let's get out of this trade. Oh, sorry, get out. Click again. All right, I won December 8th. December 8th, here we are. I want the 450 put and the 445 put. So sell 450 put, buy 445 put, December 8th, 91 cents. The mid is 91 cents. Let's start off with 95, so minus 0.95. So sell 450, buy 445 put, December 8th, buy order done. Let's go back to the portfolio. So I've got two trays here that aren't filling. Oh, three trays that aren't filling. I can go in and adjust them. All right, so that's for this one. This one, December 13. Okay, this one's not breached yet. I'll leave it. And this one is not breached yet, so I'll leave. So I guess I've got too many call spreads on XSP. So I got one, two that are not breached. I've got two of them that are breached. This one is hopeless. I can't do anything with the put spread, so I'm not going to do anything. This one, I'm trying to sell a put spread against it. This one I'm trying to close because it's already profitable. And I'm trying to sell a new call spread on Netflix. Okay, so maybe I can close this one as well just to get rid of it because it is max loss. I mean, December 1st, how many days till December 1st? I've got 10 days. I mean, it is possible that it falls. But you know what? I'll keep it because it might fall. It might fall. Who knows? All right, so let's adjust this one. So let's see if I can get this one to fill because it's showing a good profit. 35, so let's do 33. Nope, you don't want to? All right, I'll give you the 35. Modify 35. Submit. Accept. There you go. So that one is filled. The next one here, this one, let's modify it a bit. Let's do. Oh man, now it dropped to 150, 190. Not cool. Let's try 190. And this might not be live because I don't have. All right, let's change this again. 190, 155. So yeah, this is not live because I didn't pay for the subscription. So I'm just gonna go down at 5 cents every time. All right, nothing yet. I'm at 185. Gonna have to go lower. 180. Still nothing. I guess Netflix is flying. 175. Come on, don't be silly. 175 is very reasonable. All right, let's look at this put spread on XSP. Okay, let's bring it to 90. Oh, come on, what's going on? Why it doesn't want to fill? I've got reasonable orders here. 74. Okay, now they're just exaggerating. All right, let's try this one. All right, I guess I'm way off because that's why you need to have live quotes. There you go, submitted or filled, I mean. And then this one, let's go 87, I guess. There you go, filled. All right, let's go back to the portfolio. Let's see what it looks like. Now I've got excess liquidity went a bit higher. Unrealized P&L still 1,700. All right, let's look at my cash. My cash balance is 989 because I just collected credits from selling new put spreads. But I'm still in trouble with my existing positions. So now I've got this call spread on its own, 450, 455. It had a put spread, but I just closed it for profit. Maybe I'll reopen the put spread if Netflix drops. I've got this call spread on Netflix, but I also have a corresponding put spread with it just to mitigate it, to reduce max loss. I've got a call spread on XSP. This one's a max loser. I can't even tell the put spread. It's worth nothing. I've got a put spread. I've got a call spread on XSP as well, 450, 455. XSP's at 455. So I sold a put spread at 450, 445, which is this one here at the bottom. I don't know why Interactive Brokers doesn't put it together. This one I just sold right now for extra credit, just to reduce max loss on the overall trade. What I should be doing now is sell a new call spread even higher. Because this one has been breached, that means the market has gone up a lot. So it's probably a good idea to sell a new one out of the money. But I don't want to do that because at the rate the market is going up, I might be compounding losses. I usually prefer to do it on the put side, but market just keeps going up right now. I don't like selling call spreads, but it's hard not to sell. First of all, I've noticed calls are worth more right now. It seems like it has that 5% interest rate that the market is offering. It seems like it's priced in the calls. So call spreads are worth more now, and when the market's going up, I like to sell against the market. So sell out of the money. I like to sell calls on a green day and puts on a red day. But yeah, this one's not working. And then all right, so this is done here. And then this one's not breached, and then this one's not breached yet. So I won't do anything to these two. So these two I won't do anything. And I did what I could with what I have. And I've got 989 cash. But that's not my profit because I still have to buy a bunch of call spreads back, right? Like each of them have to buy back for $5. That's worst case scenario. Hopefully it doesn't get to that and market recovers a bit. But my stocks, my shares in my position in my portfolio is actually doing well. But yeah, so hopefully I don't think they'll need to liquidate any positions yet. We'll see what happens. But yeah, I just wanted to share with you my first margin call threat with Interactive Brokers. Thanks for watching.